Day trading is a business. This is a very important topic that I want to go over because a lot of people actually overlook this. They don't think that day trading is a business. A lot of people think that day trading is gambling, but then there are some people who have a little bit of success at trading, but don't realize that they're taking a wrong approach still, and they need to treat it like a business. And I'm gonna go over several aspects of this and why it is a legitimate business. Before we get into the video, be sure to drop a like, subscribe to the YouTube channel to get all this daily content that I'm be putting out because we're fixing to blow this channel up. I'm telling you, you don't want to miss it. Subscribe. Let's get into the video. So what is it that every legitimate business has? What do they start off with? What do they build before their operations are just all systems go? That's a business plan. A business plan really drives a business forward. It gives them their vision, where they want to go, what they want to do, who they want to serve, and ultimately what their business goals are. But how can you develop a business plan with trading? And that's exactly what we're fixing to go over, because I'm going to break down about 5 to 6 different elements of this on what you need to have in order to have a good business plan for yourself in day trading. So first things first, the first part of this business plan in day trading is understanding what markets you want to trade. And to understand what markets you want to trade, this is where you got to pull in your zone of genius, what you're good at, what you understand the most, and then go find ways to trade that specific industry. If you're really good at understanding the tech industry, then the NASDAQ might be for you. If you're really good at understanding energy, then crude oil might be for you. Figure out what it is you're good at, what you understand the most, and can understand what drives the market, and then start trading in that industry. Far too many people start trading what they don't understand, and usually that ends up very, very bad and accounts get blown. Don't be that person. Trade what you know. The next thing is understanding what assets in that industry you want to trade. Do you want to day trade actual commodities? Do you want to day trade futures? Well, say if you're into the NASDAQ and you're a tech, do you want to go and day trade Tesla or whatever other tech companies there are inside the NASDAQ? Or do you want to trade the actual NASDAQ future? Understand what you want to trade and understand the risk parameters that you have for each. And this is where you don't want to deviate. You want to understand fully exactly what it is you're trading, the risk behind it, the reward behind it, what moves that market. Understanding what assets you want to trade is extremely, extremely important because it's going to be your pure focus. The next part of this business plan is understanding how much you want to trade with. If you're a newer trader, it might be a little bit less money than the experienced trader. Understanding your financial situation and where you are at as a business currently is extremely important because you don't want to just risk the farm on trading. Have a set amount of money you know you can trade with and build your risk parameters around that set amount. And then that kind of leads into the next part of the business plan is how much do you risk? Everybody views risk differently. A lot of people say you shouldn't risk more than 5% of your account. Some people say you shouldn't risk more than 1% of your account. Ultimately, that's going to come down to you and what you can emotionally handle. You know, if you're starting out with lower capital, I don't recommend you risking a whole lot of your account. Probably that 2% mark is where I would stick. But overall, it comes down to what you can handle emotionally and mentally that needs to determine your risk. That and obviously how much money you're starting with. The next part of this plan and what's going to take a lot of work in building is developing your strategy. What does your strategy look like? And this is where a lot of back testing is going to come into play. Whether you're trying to identify reversals or you're a cumulative delta divergence trader, or you're a VWAP trader, you're a momentum trader, your price action, use all these indicators, you're going to figure out what kind of day trader are you? And then you're going to start to develop your strategy as you continue to backtest and find what works for you. But ultimately, you should do this in a simulation account or paper trading account. I don't recommend backtesting with actual real cash. Never a good idea. Develop your strategy in a simulation account and figure out what you do best in terms of what you look for entries and exits. Again, this part of the business plan is going to take you some time to actually develop. So be prepared to have a little bit of patience and understand fully what your strategy entails, and you're not going to deviate from that strategy. The next part of this is just like every other business. They track quarterly revenue, monthly revenue, yearly revenue. They track it. Tracking progress is extremely important. So having a journal using something like TradeZilla, maybe tracking your trades, tracking your profits, your days, your months, your weeks, your years, your quarters, whatever. Make sure you're journaling. Have a progress tracker because you need to see your trajectory. You need to see your growth. You need to remind yourself that you're doing something right or you're doing something wrong. This is extremely important. Please, please, please do not trade without tracking your progress or having a journal that tracks it for you. If you find yourself in a downward spiral where you're not really getting anywhere, this tracker, this journaling is going to show you that. It's going to show you the data behind all of your trades, all of your weeks, all of your days, your months. And so if it's not looking good or the trajectory is flat or going in a downward trend, then that's going to tell you need to change something about your trading or strategy. Whereas vice versa, if it's showing that you're on an upward trajectory or upward trend, you're making profits and you don't need to change anything, you're doing good, the data backs it, keep doing what you're doing. Journaling is key in tracking progress. And that kind of leads us to the next part of this business plan, and that's just doing monthly recaps. Recap your month. How much you make, how much you lose, what did you do well, what did you do wrong? What was your biggest profit? What was your biggest loss? How did you follow your rules on your biggest loss day? How did you follow your rules on your biggest green day? Do a monthly recap and figure out what you did as a trader for that month. Because again, just like tracking progress in the previous one, that is going to tell you exactly what you need to do or what you need to change, or if you need to change anything at all. All of these steps that I have gone over are extremely important. And this shows you why and how day trading is actually a business. This is a business. It requires a business plan. You need to follow it, and you need to strategically build this plan around your trading because it is going to determine your success as a trader. Do these things consistently and you will find yourself doing very well as a trader. If you guys like this kind of content, be sure to smash the like button down below. Subscribe to the YouTube channel to get more daily content, and I will see you in the next video. Cheers.